and thank you very much for joining me this evening. Thanks also to FP Markets for sponsoring this Careers Hour, let's call it that. And hopefully I'll be able to give you some information to help you on your way in what at least I consider to be a very, very exciting industry. In fact, I can still remember back to over 30 years ago when I started in a bank in Germany, and I would have stayed. If they'd allowed me to work for 20 hours a day, I probably would have, because I love the job that much. So it is a very, very exciting industry to work in. And hopefully I'll be able to give you some tips on how to position yourself and get yourself started. So just, again, a little bit of information about myself. Again, my name is Sean Lee. I've been in the market since 1986. I studied pure economics before that. It was a different time, obviously, then when the banks, there were maybe, I'm not sure how many, 400 or 500 banks globally, each with, quite big trading rooms. So there were quite a lot of opportunities for graduates coming out. I took one of probably 5 or 6 positions I was offered just coming out of school. So that's obviously a lot different to the industry we've got now. But it's a really, really exciting industry to work in, and you don't necessarily have to be a trader. I think that's the one thing I will say. Most of you here, I'm sure, are intent on following a trading career for yourselves, and I very much hope that there's some gun traders among you, and let's see if we can't find out which one of you are the gun traders. But there are other opportunities as well. So I think we're going to start with just a little bit of a general overview of the market, and who the main players are, and how can you get started, what sort of qualifications you can earn, or what sort of qualifications you need, and I suppose most importantly to a lot of people, what you can actually what you can earn, what sort of a living can be made in this space. So let me just go quickly. I mean, these are just sections that I've sort of made up myself that make sort of sense to me in terms of explaining who the main players are in the market. So you can see them there. I'm not going to go spend a lot of time on each slide, and we're going to sort of dig down a little bit deeper into each section and see which opportunities are available in each of these. And you may be able to decide for yourself then where you fit in, and what the best way for you is to get started. So what I will say just before I get into more detail is that I've been sort of talking with Chris and Anukul here at FP, and it seems we've just got so much content to do. We've decided we're going to do another webinar probably 2 weeks from today, and I'll sort of go into that one a little bit towards the end of this one, but I think we're just going to have so much content. I think we're going to have to split it into 2. So the guys at FP will be back in touch with everybody who's registered. So don't worry about that too much. They'll give you details on the second one. So just in case you see that we're only halfway through and our sort of hour is up, don't worry about it. I think we're going to stick on a second hour in 2 weeks from today. So let's go and have a look at the probably the biggest players in the market, and they're the banks and the liquidity providers. And let's start with some really good news, and that's that the banks are hiring again. So back in about 2007, 2008, and with the global financial crisis, and all of the banks got in a lot of trouble with governments and regulators because they lost a lot of money. And they were seen to be trading not only with their own capital, but also with customer funds. And the regulators cut down on this, and they went, as they always do in cases like this, they went too far, and basically stopped all of the banks trading. So they could still make markets, but they couldn't really trade proprietary funds. But that has started to change. I think with Trump coming in the States, and more of a relaxed attitude there towards regulation, and the Dodd-Frank, it won't be repealed, but I think it might be watered down a bit. Anyway, cut a long story short, the banks are hiring, and you just have to go to a website like, say, eFinancial Careers or somebody like that, and just put in, foreign exchange traders globally, even junior foreign exchange traders, and just see how many jobs come up. And there's quite a lot. And maybe a year ago, even 6 months ago, there weren't all that many. But yeah, there's quite a few coming through now. So I suppose the big question then for most listening to this particular webinar is what sort of people are they hiring? Well, first and foremost, they're hiring graduates, and I think every bank certainly that I know of, that's one stipulation from the beginning is that you must be a graduate. You must have a degree, not a master's degree. You must just have a degree. If it's in advanced biology, I'm not sure it really matters. They just want people who are coming out of who've done that extra extra educational level. So I think that's the first one. We'll look in a minute at hedge funds and prop desks, and they are more they're more willing to hire people without a sort of a university education. But the banks, certainly, I think to a man, as far as I know, will only hire graduates. So if you want to get in, you need a degree. Now, do you need a track record to get into a bank or to a trading desk? It's certainly not going to hurt. I'd say that it's certainly not going to hurt if you're able to show that you have already got some experience in trading markets. And here, look, primarily we're talking here about foreign exchange markets. So if you're able to show that you've got experience in trading foreign exchange markets, it will be of significant benefit to you. Now, every bank, every employer knows that it's very easy now to access a retail trading account for anybody. You can open an account with sort of relatively very small amounts of money, and show that at least you've got the interest in trading. So I would expect, from a personal point of view, I think I would expect, if I was hiring somebody sitting in a bank and I know that the student coming to me has just graduated and he has never opened a trading account in his life, I'd probably question whether I should be hiring him or not. So I think it's probably a good idea to have had some experience in trading when you go into the interview. And so that's the first thing. Have a little bit of trading experience. Whether or not you've made money or lost money, I'm not sure. It depends on the role, and we'll go into the roles in a minute. But for a general trainee assistant, dealer's assistant job in a bank, I don't think they're really interested in your drawdowns or your Sharpe ratios. They're more interested in the fact that you have had some experience. That's a bit of trading experience. Secondly, IT. You must have a very good grasp of the new technology. If you're able to manage systems, if you're able to automate trading systems, if you're able to troubleshoot on APIs. I mean, that might be a step too far, but having some level of competency when it comes to IT, I think is absolutely essential. So I think if you turned up for an interview, let's say with Citibank next week, and they're looking for a junior dealer, and you've got a degree in mathematics and statistics, and you've also, or maybe it's mathematics and computer science, and you've been trading your own account for the last 2 years, and you've had a bit of experience with commodities and foreign exchange, and you understand what a swap is, you're going to be at a huge advantage compared to almost everybody else who's applying for the same role. So for a junior dealer, obviously you cannot have by definition, you don't have any work experience. So the thing that's going to set you apart, again, will be that degree. And if it's in something like computer science and mathematics, it will obviously be of benefit to you, and have some experience trading lots of different instruments and knowing what they are. So that will certainly put you ahead um, ahead of the field. So that's in terms of, so that's the bank. So the general jobs, again, if you go to that eFinancial Careers and have a look, you'll see a lot of junior dealer type roles. And that basically means they're going to train you up on most aspects of uh, what they do in the Treasury Department, which these days is a lot of IT. So they're managing a lot of systems which manage their risk. And you may be dealing with you may be dealing with customers to some degree. You may be doing some sort of, well, moving into trading and risk taking. But to begin with, I would suspect it would be more of a sort of a watch and see. You're sort of just a, what's the right word? You're not an administrator, but just sitting. You're basically just sitting beside, sort of watching screens and making sure no flashing lights start going off. And that's sort of a role. And that's probably in the banks where you're likely to get started. Um, so I'll just, and I think this is an important one for a lot of people out there, especially the graduates who are looking to think about a career. If you have a mathematics and computer science, and you have some experience trading on your own account, don't worry too much about the profitability side of it. For these particular roles, it's not essential. It's just the fact that you show some competency. Then I think you're going to be able to put on a very put on a good show when you go in for your interview. I certainly think you'll get an interview. So yeah, certainly lots of exciting opportunities in banks. And I spent 17 years or whatever it was working for international banks, and I loved every minute of it. So I can highly recommend that role, that type of a role, if anybody's considering that. So they're the banks. Now, as I said, I am going to skip over some of what I want to talk about. I'm going to talk about next time in terms of the actual performance. So if I start going into the parameters you need in terms of returns and drawdowns, etc., and here I'm talking about prop trading roles, which are also starting to become available in some of the banks. In other words, they're starting to look for junior prop traders, people who can manage risk and sort of manage the bank's money. Um, those sort of roles are also becoming available, and that's a specific skill set. So for that, you'll need the degree. You'll need, probably, if you've got mathematics, computer science, it's going to help, and you obviously will need some sort of track record. But in this case, it's going to have to be a decent. It's going to have to show some qualities, some skill, some trading skill, and that's what will set you apart and potentially help you to get one of those roles. And when it comes to those actual parameters, I think we're going to spend more time on them in the second half, i.e., in the second webinar. But just briefly, the main thing that they'll be looking for is consistency. So what no employer will like is massive swings. A trader who can make 6% one day and lose 5.6 the next day, and then that type of a trader, I don't think anybody likes them anymore. So if that's consistency, I would say would be probably first and foremost the main thing they're looking for. And they're going to look for, remember that the banks have got a lot of resources at their disposal that you as an individual trader don't have. In other words, they've got great analysts, they've got great strategists, they've got great access to market flow information, market positioning information, all of the sort of advantages that the only advantages really a good trader will need in order to make a lot of money. So the bank understands that you don't have these skills outside of, as a retail trader. But what they look for are the traders who show, as I said before, consistency and then the ability to make money, which is very, very rare. A lot of people have the ability to make money and lose money very quickly, or the ability just to not make a lot or not lose a lot, just to be very, very safe. Whereas it's very rare the rare skill is the person who can, when they're right, make a lot of money, and when they're wrong, not lose too much. And then with all of the advantages the banks can give you, uh, that skill can then be exacerbated or exaggerated. That you can they'll give you all the tools you need to pick the right direction for the market, if you like, or to pick the right trade. Then all you've got to do is use your skill to trade. So yeah, sorry, I don't want to go into much about that now because honestly, we could talk for at least another hour just purely on the parameters that are required for each different type of trader, like a short-term trader, more of the fund manager type. But we will look into those in more detail in the second half, which is going to, as I said, happen in a couple of weeks. So that's in a nutshell. That's what's happening in the banks. Some very, very good opportunities there. So worthwhile thinking and planning ahead and ensuring that you've got the right type of qualifications and the right profile. In terms of, look, I'm going to have to put a bit of a dampener here on some of the more, and this is a horrible thing to say, more senior citizens, and that's people probably over 30. Those roles, it's pretty hard for anybody to get into an existing institution now, like a mature type trader who's already, looking for a decent, well-paid job, if you like, in a bank. There's not very many of them available. So lots of opportunities for the junior types, not so many for the mid-range traders, I'm afraid. Now, I have also included liquidity providers here in this space in terms of price makers. Quite a few big players here in this space. So the liquidity providers generally will offer liquidity to retail brokers. That's what they do, or they manage books, risk books, if you know what that means. So they manage all of the. So some of the smaller brokers would not have their own dealing desks, so they would sort of employ or contract in a service like this, like a liquidity provider. And this can be quite an interesting role. You can see very, very good flows, and it's not really a prop trading type job. It's more of a sort of intraday flow management type job. And so very interesting opportunities there. Not as many as in the banks, but I have seen a few of these coming through recently. And probably less. They will train up sort of dealer assistants and junior dealers, and I've also seen some roles for people with existing skills. Here, I don't think and in fact, I'd go out on a limb here and say the degree is probably not very important. That is not what their main focus. If they're looking to train somebody up, it's a particular type of person they're looking for. So I guess, obviously the usual people who fit in with the culture and, enjoy the market, have the work ethic, etc. So I think if you can show that you've got enthusiasm for the markets and that you've been involved for a while and that you've been, trying to get into the market, I think that could be of really of a lot of benefit to you. And you don't necessarily need to be able to show a great track record, because this is not a proprietary trading role. You're not sort of making money from nothing, if you like. You're sort of managing flows that come through, and they can be quite substantial. And anybody who's been in the markets knows that it can be a lot of fun if just occasionally you get some big flows that you get to manage, and you feel like you are controlling the market. It might only be for a couple of minutes, but it is a nice feeling when you get it. So I've also listed here sort of customer service, sales, and IT, and sometimes it just pays not to be too choosy. I've seen quite a number of young guys who've started in areas like customer service and sales, and just used that as a way to get in the door before they moved on to the dealing desk. So if you if you're keen, whatever the role is, just take it. That would be my advice. Apply for it, get into one of these organizations, and then work your way towards where you want to go. For me, the fun is on the dealing desk, but everybody's got their own particular skills that they're good at. So I'm not sure if I've skipped one. No, I haven't. So that were the banks. That was the well, we're just talking about price makers, and now we're going to go look at trading professionals. So I'm sorry, I think I've done this the wrong way around. I'm going to start at the bottom of the tree here, and that's with individual traders. Now, most of you probably sitting out there are individual traders. And by an individual trader, I mean somebody who's non-licensed. So you are just managing your own money. In most jurisdictions, you are also allowed to manage funds for friends, well, I think what they call friends and family. And there are certainly some opportunities available here. So there are gray areas. We've got the whole copy trading space. And I haven't seen very many good copy traders, but I've seen some copy traders who've built quite decent businesses. So there are definitely some opportunities. And in most jurisdictions, it's not yet a regulatable activity. I think the FCA in London have just introduced that this year. That it is now a regulatable activity, and I think it's just a matter of time before the rest of the world follows suit. But for now, as an individual trader, so if you have established a track record for yourself, you can basically hang out your shingle and open for business. So you can get your Auntie Mary to give you some of her hard-earned money if she feels willing and wants to take some risk on. So as I said, you can take on up to 19 accounts, I believe, from friends and family. Now, not fun. This isn't a fund. This is sort of a managed account. And in most jurisdictions, you can also offer a copying service. And the reason you can do that, the reason it's gray, is because the person who is copying your trades does actually have a choice as to whether to accept the trade or not. Now, in most cases, it's almost immediate. And you just normally I think you click a button and just say, I automatically accept all trades. But you don't have to. You can actually, in theory, what's happening is the trader sends out a copy signal. The copier decides if he's going to copy that trade or not, and then says yes or no. So that's in theory what's happening. As we know in practice, it's a little bit different to that. But as an individual trader, like I said, you can manage money for friends and family. I would suggest the normal fee structure is 25% of profits. I know some people try to charge a lot more, but you've got to, for the risk that the investor is taking, I think you've got to be reasonable about these things. So 25% of profits, I think, is fair. Now, that's what on a high watermark basis. So in other words, if you lose 10% of capital, you do not get paid anything until you make that 10% back. And you only get paid the percentage on fresh profits. So as an individual trader, and I work with a lot of these types of traders. And in fact, we'll talk at the end about the FP Trader Challenge, which this is where we're trying to unearth sort of these types of individual traders who have the skill at this level and are ready then to move up to the next level. The copy traders, you could either charge people who want to follow your trades, you can either charge them a monthly fee, or again, it's much more common to simply earn a percentage of the profit you make. So I would recommend, again, as I do to all traders, that they present a very rigorous description of their strategies and of their risk management profile, and don't be promising what you can't deliver. And this is a step towards building a career. So you're not trying, I know people try to make too much money too quickly, and it's just it's never ends well. So it's a good way to start managing. As I said, if you've got some individual relations or wealthy parents who are willing to get you started, it's a good way to get started, and then moving into the copying space where you can charge a fee or earn a commission on somebody copying your trades. So that's the individual trader. That's how they can get started. Now, the next step up is once they have established a profile. I think the most logical next step is to then operate under license. And there are ways of doing this, and there are organizations that can help you get started. I mean, normally you have to pay a fee. But again, there's no educational requirements here. It's or similarly with the individual traders. There's very few educational requirements. So sorry, before I go back up there, what I should say is if you have some element of systemization or some part of your trading strategy or risk management strategy is systematized, I think you become a lot more attractive to investors because they, at least if it's your risk management system, then they understand what the downside is for them rather than, the old style trader sticking his finger up in the air and deciding how much risk he was going to take. If everything is written down in rules, I think it makes a lot more sense and it's much easier for the investor to invest in. So it's just something I was going to add here on the individual trader. When you're starting off, if you have some part of a system inbuilt into what you do. So let's presume then you've been somewhat successful as an individual trader and you're ready to take the next step. And the next step then is to start operating under a license and then to build out a managed account business. Now, generally speaking, this will operate through, retail brokers will promote you. I'm sure I'm allowed to say that. And there's they have investors who come to them who are always looking for good traders, and I'm sure they won't promote anybody who's unlicensed. But if you are able to operate under a license, then it can become quite a lucrative, lucrative business. The difference between the retail investor and the sort of institutional investor is, okay, the retail investor, he's a lot less boxes to tick. He says, oh, I like the look of this guy, I'm going to back him. But he's also very quick to pull his money out. If things don't go well, he might decide after a day, oh, I don't like this guy, I'm stopping. Whereas with the institutional investor, you'll find that they, as long as you stick with your parameters, exactly what you set down in that rigorous description of your business, then they're likely to stick with you. So that's the difference between the retail and the institutional. But here we're talking primarily about retail investors. So you may have 500 people who are willing to give you $10,000 each to trade. So, that's, $5 million account. And if you leverage that sort of 5 times, you're trading, maximum limits at about 25 million, dollars. So it's a reasonable size position. You can do a bit of damage, good and bad. So, and if you're earning 25% of profits, it can be very rewarding. So what you need here, education requirements, none, I would suggest. It's all about performance. Trading track record, yes, you need to be able to show, I would say, at least 12 months of, it's hard to find audited data, but at least verifiable data that shows exactly what you do. And then in terms of working conditions, here I'm talking about, so you're a remote trader, probably working from home, and you earn roughly, on average, 25% of profits. So it can be very lucrative. So I've been working in the retail space since about, really for about 15 years. And I can remember the names of everybody who's done well going through this space. So it's not a huge number. I suppose that's what I'm trying to say. So it is, there's not a lot of people who build very successful managed account businesses. So it's not easy. And the good ones move on pretty quickly into probably this space, what we call prop desks. So they either set up their own prop desk or they go and work for an existing prop desk. So the difference here is that the prop desks will, obviously they have a lot more money. They're primarily getting their funding from institutions, and they could have, it'll be hundreds of millions of dollars under management. Education requirements, they don't really care. The trading track record, similar to the last, but here I would suggest you need, I would say at least a 2-year track record. Um, yeah, I would say you need a 2-year track record, and the working conditions here are generally different. You'll be presuming you're not the owner of the prop desk, you're just working for one of them. You'll get a very decent base salary, nice working conditions, a nice, most of the ones that I know are actual offices, so they don't allow for sort of virtual traders, but there are a few that I can think of now who do allow the more systematic types to just be remote traders, and the working conditions again a bit different. So whilst you have the base salary, you may be on sort of 10 to 15% commission, something of that order, but still can be very, very lucrative. So uh, yeah, so that's the step up for the managed accounts. That was retail. Now you've gone up into prop desks, which are institutional, some retail, but sort of a mix. And then the next step up is the hedge fund, and that's purely institutional. And once you get up into this space, educational requirements. There are actually some who do require a degree. Not all do, but certainly some do. Again, if you turn up, even with the ones who do require a degree, and you're a gun, algo designer, and you've got the best system that has never lost money ever, don't worry about it. They will forget about their their insistence on a degree and hire you anyway. So performance talks. Yeah, here you're going to need a like quite a substantial track record, and uh, again, and here I'll speak briefly about the two different types, which I sort of break down into fund manager and prop trader. So the fund manager is, the guy who tries to deliver on average probably 1% per month. If you're delivering 12% per annum as a fund manager type in the hedge fund industry, you're a superstar, because you're probably managing $1 billion or something, leveraged maybe 2 times. And if you can deliver 1% per month, as you can do the math, it's you're earning a lot of money. So and then the drawdown profile there, probably you'd need to keep it below 1.5% per month. And the reason for that is, just think about it from the investor's perspective. If an investor is putting in $100 million, and your worst monthly drawdown has been, say, 3.5%, he thinks the worst, and expects that in the first month he allocates to you, you have a maximum drawdown of 3.5%. He loses $3.5 million, and he probably loses his job. So yeah, that's the reason why, as a fund manager type in this professional institutional space, I would suggest you keeping your drawdowns below 1.5%. You may think this is not all that relevant to you now at this early stage of your career, but it actually is, because this is when you start building your track record, if you like, so, and your profile and how you operate. So yeah, I think it is important from the very start you're almost working backwards. You look at what the end goal for you is. It to be a hedge fund? Is it to work on a prop desk? Is it a managed account? Is it just to be an individual trader? Whatever the end goal is, or even if it's to work in a bank, then your track record as you're building it now must be built accordingly in order to deliver that result. So yeah, so that's sort of the graduation, if you like, as I see it, from individual trader all the way up through to hedge fund and bank. I'm just going to I've just noted down here 5 examples over the last few years of relatively young people who I've been working with, who've gone into all different areas of the industry. So one who's ended up in sort of risk management with a major European bank, and that's more on the compliance side that he's ended up working. In his background, he had a mathematics degree, and I mean, he was really trying to get into trading, but that's where he ended up. He tried to get in. Well, he thought what he wanted to be was a trader, but he's ended up with a really, really good job as in the risk management division of a major bank, but more on the compliance side, so that they're managing or overseeing the risk that the bank is taking. Two others who have gone through, they were definitely at this stage individual traders, and both are now here in the managed account phase, both now licensed. Both still, no, sorry, one has just very recently given up his full-time job and is now a full-time um, managed accounts manager, and the other is still working at a full-time job, but is I would imagine getting pretty close to moving into the managed accounts full-time. Then that's three, four. He is, yeah, so he's done very well. He's working in London, in a retail broker, in sort of sales and sort of junior management. Again, he fancied himself as a trader, but I don't think he had the necessary talent. But he's ended up by just getting into a sort of relatively junior sales role with a one of the retail brokers, and he's forging quite a good career for himself. And finally, yeah, this guy, and he's just started with a London-based hedge fund as a assistant dealer, and yeah, he had been trading and with he traded with a number of brokers, and he traded with like a, what do you call these, like a prop fund, and without any great success. But yeah, in fact, his performance was not particularly good, but nonetheless, he was able to show the necessary skills that this hedge fund wanted for a dealer's assistant. So there's lots of different ways of getting in, getting started. It's yeah, none of us exactly know where we're going to end up. So that's the trading professionals, and yeah. So I'm going to look here at the service providers, so the brokers. Whilst we're just talking about that, there's a lot of well, I don't want to say easy entry levels, but there's obviously there's a lot of brokers now, a lot of retail brokers, and they've got a lot of positions available. And if you do want to get started in the industry, and rather than aiming for the great job at the big bank in day one, the easiest starting level could well be at one of the retail brokers. Sales and marketing, obviously that's sort of self-explanatory. Analysis and commentary, that's maybe not necessarily a full-time job, but oftentimes you can present yourself as a sort of a blogger, tweeter type who can provide analysis and commentary on the, like a running or daily commentary on the market, and that can be a way, you just provide it sort of on a fee basis, and that can be a way of starting to create or generate a name for yourself in the market. So it's another way. It's a sort of an indirect way to get started, but you just got to be proactive. So if things aren't happening, just start a blog, start tweeting, sending out your trade signals, get a bit of a following going. So that can be definitely a relatively easy way to get started. So here we've talked about these online services. Ways, yeah. So as I said, start a blog, start sending out your trade ideas via Twitter. If you have some skill that you can impart onto others, then start offering some education, mentoring, perhaps if you're more of a established trader. So there's lots of ways of. I'm not saying these aren't going to be full-time incomes. I think it's pretty hard to just get started and create a full-time income. But just even if it's only part-time and a couple of days a week, a few hours a week, just to start creating somewhat of a profile for yourself, and then you can show the employers that you're proactive about these things. Yeah. So. And okay, so let's go back to the banks here. So there are other avenues as well apart from trading. So I've kept this sort of separate to treasury because it is a little bit separate. It's more analysts, strategists, and economists. So I talked earlier about the big teams of help and backup that the bank traders have. And this is primarily to offer a service to the bank's customers. But particularly as technical analysts these days, if you can, and it's pretty easy to learn, and most retail traders are self-taught technical analysts. But if you also have got a degree in some relevant, be it economics or finance or mathematics or statistics, something relevant, and you are well versed in all areas of technical analysis, and perhaps you have done some type of proprietary, something that you maybe consider your own particular little way of analyzing the market, then there can be some very good opportunities in not only the banks, but also the brokers, because I would say virtually all of the big brokers will hire one full-time technical analyst, and the banks may have two or three. The banks, brokers may not have a full-time economist. They may just use a strategist or a contracted in, if you like, strategist or economist. But definitely the banks will employ quite a number of market economists. So there's some really good opportunities there. So if you love to read about the market and you love to figure out where it's going and what have you, maybe you should consider thinking about this type of a career rather than the trading career, because that trading skill is very rare and very unique. And I sort of feel that a lot of people in the retail space are much more suited to being analysts or strategists or economists rather than traders, because the trading skill is actually the rarest one of all. So whilst we're on that, and I'm going to have to finish up here shortly because they're knocking on the door. Whilst we're on that, on the trading skill, look at it. It's very, very highly sought after. Anybody who's got this particular trading skill is very, very sought after. But as a retail trader, it's almost impossible to show that skill to even starting at this level as an individual trader, or even to get to this managed account stage. How do you put together a continuous 1-year track record when you're either studying or you've just started a job as an engineer or in HR or whatever your job is? How can you possibly put together a track record which you're going to be able to show to employers or allocators, or just to get you started from this level? It's almost impossible. But we've devised, we hope, an avenue which will be able to get us past this level. And this FP are one of the first hosts of the Trader Challenge. Now, what we found is that if we can put traders in a highly pressurized sort of time, limited time trading event, so that they put their best foot forward, try and show exactly what they do to the best of their abilities over a short period of time, that we can then attract allocators, investors, employers to hire these people directly. So rather than, because I think it's almost impossible for the trader to have a full 12-month track record. So that's why FP Markets here have as a host, and Camel Global Markets as a sponsor, and they've created the FP Markets Trader Challenge. Now, that is starting in the next 3 to 4 weeks, I believe, and I'm sure Chris Marr here from FP will give you a little bit more information on that shortly. So the good news about that is that there are certainly allocations and potentially jobs available for those who show that they have the trading skill, who are able to show it in this sort of pressurized environment. So look, I'm sorry we were a little bit late in starting, and now it's already time to finish up. So that's why we're going to reconvene in 2 weeks, when we will spend a lot more time talking about the actual returns and parameters that particular types of traders need to be able to show in order to get their career started. So yeah, thanks very much for your time. I'm going to hand you back to Chris here from FP, and I believe we will be taking some questions shortly as well. So again, thanks for your time, and here's Chris.
Thanks for that, Sean. It was a really insightful overview over the FX industry, and particularly how to get started in the FX industry itself. Now, as Sean mentioned, we are having a Traders Challenge. Now, with the Traders Challenge, we are one of the partner brokers with FXWW and Camel Global Markets. Now, Camel Global Markets, as Sean said, will be providing capital allocations. Now, the metrics themselves will be sent out in the next couple weeks. You'll also find out about it more in the next webinar upcoming in 2 weeks' time. If you are interested in signing up and getting more information, the link is there in front of you. But don't stress, because this will be sent out to you in a follow-up email. As well as this, with the capital allocations, FP Markets clients themselves will also be in the running for 3 different prizes. So your first prize will be 3-month subscription to Thomson Reuters Icon, plus a 6-month subscription to the Thomson Reuters chat room, and in addition, a $600 in free commission for the MT4 or 5 platform. Now, your second place is 3 months to subscription to Reuters Icon and the chat room as well. And third place is just 6 months to the chat room. Now, like I said, our personal one will be based off a percentage return on P&L, but there will be terms and conditions also sent out in the next couple weeks. If you are interested, like I said, you can sign up via the link in front of you, or if you're just after more information, please feel free to email me at c.meagher@fpmarkets.com.au. And whilst I do have you, not many of you do know that we also do run a referral program for MT4 and MT5. So if you're looking to get your friends and family involved, the deposit and bonus structure is there in front of you. So if your relative, friend, or any referral deposits $500 to $999, they'll get $50, and that goes all the way up to a $10,000 plus. You'll get a $300 bonus into your account. Now, I'd like to thank Sean for his overview today. There will be more information in the coming weeks regarding this upcoming Traders Challenge, and we will also have a follow-up webinar where we will go through more in particular the trading aspect and trading career in the FX industry. Thank you all for attending. There will be a follow-up video sent through to you, so if you do have any questions, please feel free to send them through to myself, and I can relay them on to Sean.